Okay, everyone, welcome back to Price Action Labs. Here we're going to be going over a gold ICT slash SMC tutorial. We're going to be going over how you could have potentially traded some of this price action over here. Right, I don't trade gold myself, but because of how popular this market is, both in the Price Action Labs Discord and also on social media, people ask me about gold. What do you think about this? What do you think about that? I thought I'd make a video breaking it down so that people can understand sort of my thought process behind gold, right? And how you can trade near this all-time high. So let's just start by marking up the chart over here. This is our all-time high, roughly at 25.31 areas. This is the all-time high. So from this 4-hour time frame, we have our structure marked out with a structure high, structure low, and now we just had our structure high over here, which is the all-time high, up at 25.31, 25.32. So how was I able to trade some of this kind of corrective price action down? If we head over to the 15-minute time frame, let's understand what's happening. So I actually had this supply zone called back in the end of August. Now, we had a supply zone over here which held, right? This is a supply zone. It's left a fair value gap and broken some minor structure, right? So this is an inefficiency or a fair value gap that's left to supply. And we see that this supply is currently been holding. Okay, so this is the main thing to understand. So once you have this in place, right, we're going to be going over how you could have potentially taken some trades, right? So we're going to be going over a selling opportunity over here, Friday the 30th of August, and we're also going to be going over another selling opportunity over here. So this is Tuesday the 3rd of September after the US bank holiday, right? So let's just understand price action here, right? So what we can see is we see how price is rejecting off this demand, this supply area. So this is a strong area of supply as price is failing to break above it. So now if we head down to the 5-minute time frame, right? So the 5-minute time frame, we're going to be going over a classic ICT AMD model, and we're going to be focusing on making this as mechanical and systematic as possible. When you approach the charts on gold, what do you want to be analyzing? What do you want to be looking at, right? So there's a few things. The first is we want to start with our Asian session. So this is the Asian session over here in orange, right? So the Asian session itself, for those who don't know, the Asian session builds liquidity, and the main timing of the Asian session, right? Or the only timing of the Asian session is from 8 p.m. So that's 20 o'clock to midnight, and this is Eastern Standard Time, right? So I stress again, sorry, this is Eastern Standard Time. So this builds liquidity, and the timings of that is 8 p.m. to midnight New York time. So from here now, we're looking to understand, and we're basically looking to sell within this supply area over here, this 15-minute supply. So let's actually break down the price action and see what we actually end up getting, right? So first of all, notice how we have a very, very, very subtle sweep of the Asian low, right? So this is the Asian low over here. So this was at 4:40 a.m. UK time. So that's about 11:40 p.m. Eastern time. Notice how we had a very subtle sweep of the Asian low just over here. This is what we call manipulation phase one. So when we see price sweep the Asian low first before looking for sells above the Asian high, this is what we call our manipulation phase one. So let's just label that so we can see. This is manipulation phase one. We've come below the Asian low, right? So this is, let's label this out, manipulation phase one. So what is the purpose of manipulation phase one? Well, the main purpose is to entice early sellers. You can look at this as an enticement of early sellers. Sellers are trapped, okay? And we see price kind of rip through this area once and twice, right? So quick tip about gold is you want to be trading the New York session more often than not. London is typically manipulation from what I've seen. So now that we sweep the Asian low, the next thing we want to understand is, of course, we sweep the Asian high. So this is a very mechanical and systematic way. Once you have your areas of interest, your supply and demand zones, and I'll make a separate video on supply and demand zones, what you're looking at is Asian session range liquidity, so ASR liquidity. So the ASR liquidity is essentially the Asian low and the Asian high, and we're using those as liquidity sweeps to determine our manipulation models. So this is going to be a two-phase manipulation model. So if I continue to play price on the 5-minute, once we've swept the Asian high, what we're looking for is a confirmed Judas swing, right? We're looking for a confirmed Judas swing. So let's just understand our steps. First, we have accumulation, right? And now we have a manipulation, right? We're looking at a two-phase manipulation, right? So two-phase, I'll just write M for short. Two-phase manipulation, and this is exactly what we're going to do. In order for us to get our second phase manipulation, we must identify a clear Judas swing in the market. So a clear Judas swing in the market essentially is something that breaks structure and leaves a fair value gap. And this is what we're going to be analyzing now. Okay, so what we want to see in very, very simple terms is something like this. We want to see price go up like this, create a structural low, and then break like this. So we're looking for the Judas swing to break structure, which it has. So price here has broken structure over here to the downside. So we see a very clear shift of structure. Again, what confirms the shift is it's broken with a body, right? Price has broken this low with a body. We see body breaks below. And we also see a fair value gap over here. And this is something I want to kind of clarify to a lot of the people watching, right? So we have different types of fair value gaps, right? We have the extreme fair value gap, which is up at 25.23. So this is the extreme fair value gap, okay? Now, the second is kind of the lower bound of the fair value gap, if you like, is understanding this wick over here, right? So this is the lower bound of the fair value gap, right? This is just basic terminology I use to describe it. So what I would recommend people to do now is to use a fib tool and simply project the fib tool from the upper bound to the lower bound of the fair value gap, okay? Let's get rid of the lines. Now, once you have that in place, what this tells you that this is the beginning of the fair value gap, this is the extreme of the fair value gap. Your best entries will actually be in and around this region over here, right? This is going to be your best entry over here, around about the midpoint. This is the fair value gap. You want to enter at the midpoint of that fair value gap, right? Now, what's also confirmed this Judas swing is that we've had price sweep above the Asian high. So price has now come above the Asian high and its broken structure and it's left a fair value gap. So this now becomes an A plus Judas swing because it's ticked all of our rules, right? Entry at the midpoint of the fair value gap. My stop loss, you can either have it above the Judas swing or you can have it slightly below the Judas swing, depending on your kind of risk appetite and, I guess how greedy you are for R, I guess. And now from here, where do we target? Well, the logical place to target will be that one phase manipulation from London, right? That's a 3.4R trade, just under a 3.5R trade, right? But typically, what we want to be targeting as traders is M15 fair value gap, right? So where is the next M15 fair value gap, right? That's the thing you want to target next. The next 15-minute fair value gap is just here in this region, this small kind of fair value gap over here, targeting 25.09. So this is the next kind of area over here, okay? That brings us slightly lower to about a 4.3R trade, right? But the main thing I want people to understand is that this is a two-phase manipulation model. We've had manipulation phase 1, we swept the Asian low. We've had manipulation phase 2, we swept the Asian range high. And it's been confirmed by a valid structure breakdown here. So this is what gives us our region for selling, and it gives us our confirmation. Let's continue to play price on and see what ends up happening. Now, the third thing we should also understand is that we have a dealing range to work with. We have a structural high up here, and we have a structural low down here. Okay, so this now essentially tells us that the equilibrium is priced here. Our fair value gap and therefore our entry is above the 50% level, which means we are selling in a premium, which is the correct thing to do, right? Selling in a premium and buying in a discount is the correct way to trade these, right? So we're looking for a sell trade. So we understand our fair value gap should be in the premium, okay? So let's see what happens, right? As price does mitigate our area, we go slightly above the 50% level of the fair value gap, which is fine. Now from here, partials, targets, right? So you want to be taking off some volume at the latest structural low down here. You want to perhaps be taking off some more volume over here. That's target 2. And your final target is, of course, close to the previous day low, right? So let's continue to play price on and see what we end up getting. So that's our kind of first target hit. This is now 2 p.m. UK time, so this is about 9 a.m. Eastern time. Price eventually comes to our second target, I believe, at some point. We have our second target smashed kind of an hour later, and then price eventually comes in, seeks our third target, right? So the main thing to understand is the two-phase manipulation model. Now, if we continue to play price on, we're going to be understanding the second kind of. So here we have Tuesday's price action over here, and we're going to be understanding the same kind of concept again, understanding the repeatability and the mechanical approach that this market gives you. So we have the Asian range, and we're looking for a sell again. So let's understand how we can kind of phrase this, right? So from here, we're going to be going over a one-phase manipulation. One-phase manipulation will look something like this. We sweep the Asian high, we break structure, and we're keying off a fair value gap over here, right? Everything is time-based, right? Just like this Judah swing up here. This was I believe it was a London Judah swing, right? So London is typically for manipulation. We use New York more often for distribution, right? And this can be applied over here on basically any day on gold. London is very good for manipulations. New York typically gives a distribution unless there's a news event, right? So this is exactly what we end up getting over here. London gives us our sweep of the Asian high, and it's New York that gives us our breaker structure, right? So New York session gives us a breaker structure here, and London confirms our Judah swing, right? So from here, once prices swept the Asian high and we've broken structure, then the first logical target you want to be paying yourself is going to be that Asian low down here, right? So again, we have a dealing range over here. So we have a structural high and a structural low. We want to be selling essentially at a premium, right? We want to be selling at the premium. So again, identify the wick area. Your imbalance is going to be from here to here. So this is your kind of inefficiency over here. This is the FVG you use, right? Even if we enter a little bit more conservatively, so we're entering at the wick itself, right? Stop loss, kind of, you can either have it at the Judah swing or slightly below the Judah swing, doesn't really matter. Now, our first target is the Asian low. So that's now 4.4R trade, right? So again, we're selling in the premium and we're selling after we've had a confirmed ICT Judah swing. Okay, so again, price now comes into our target, I believe, just kind of tapped in over here before we get our move down, right? So now we're looking again to target the Asian low down here. And also, we're also looking to target some further liquidity over here, right? So we've got the previous week's low, Friday, which price eventually reached to, right? So the lesson I want to give people is just understanding how we can find a high probability Judah swing and also understanding targets, right? Asian low is only one target. We understand we have price kind of when price is falling out the sky like it has done over here. You want to ask yourself, where are we going to be targeting? This here was the low from the previous week. This is a previous week low down here, right? This is the previous week's low. Previous week's low are very, very powerful liquidity pools. They don't get swept every day, of course, but them, targeting them in a bearish kind of climate is what you want to be doing, right? So again, we eventually get, I believe, price came into this region to kind of target this area where we just came very close to it. All right, so this is a overview of the gold schematic, right? Gold one phase manipulation and gold two phase manipulation using ICT concepts.